GDP growth has come in at 8.2% for FY24. That is significantly, or at least marginally above estimates, and real GVA growth has come in at 7.2% for FY24. GDP growth compares to a figure of 7% for FY23. This happens to be, I think, the third straight year that India's GDP has been in excess of 7%. Or in line with 7%. GVA growth too very strong at 7.2% for FY24. For Q4, real GVA and real GDP have been estimated to grow by 6.3% and by 7.8% respectively. That's again higher than estimates. So Radhika, I'll quickly come back to you. Key takeaways, once again a set of numbers that have surprised on the upside.
Yeah, certainly, Pallavi. I think this has become quite a trend.
Absolutely.
Even better than market expectations, better than consensus, better than the most optimistic forecast out there.
That's true.
But we'll be keen to see what's underlying. But I think on the annual year basis, it's pretty much in line with what we were expecting, which is at about 8%. So the actual seems to have come about 8.2 for the real GDP. And the gap between real GDP and GVA was supposed to be in place because of the tax payouts as well as the low subsidy disbursements. So that gap has been quite wide. And we had noted last time that it's in many quarters that you actually seen this kind of a wide wedge. I think it showed up first in the Q3, fiscal 24 number when we saw it last. That's October-December number. So not surprisingly, that's obviously influenced the whole year as well. Seems to have also played its part in the fourth quarter of fiscal 24. But I think there'll be some election impact, early part of the election impact also filtering through the last quarter of the previous fiscal year. So we'll wait and see how that's impacted some of the subcomponents. But overall, I think a very strong number, I think, continues to show that India's growth is among, better than most of the major economies in the world, on a very, certainly finishing fiscal 24 on a very strong note.
Absolutely. And before we go to Mr. D.K. Joshi, I'll also quickly go through the quarterly estimates. And this time around, we actually have industry-wise breakups as well for the primary sector, secondary sector, and tertiary sector. Let's quickly go through what that's looking like. Agricultural GVA has come in at 0.6%. I would say fairly in line with expectations. We were not expecting a strong figure there. Mining and quarrying has come in at 4.3%. That is actually lower than 7.5% that we saw in Q3. Coming to the secondary sector, on an aggregate, it's grown by 8.8%. Again, a scorching number there, led by manufacturing, which has come in at 8.9%, whereas electricity and utilities have come in at 7.7%. And construction has come in at 8.7%. So that's a great set of numbers in the secondary sector. In the tertiary sector, that's grown by 6.7%, with trade, hotels, transport, communication having grown by 5.1%, financial, real estate and professional services having grown by 7.6%, and public administration having grown by 7.8%. So at least in terms of trends, we did expect agricultural GVA to underperform in Q4, and the secondary sector and the tertiary sector to lead growth. That's pretty much in line with what's happened, but clearly the standout here is the secondary sector, manufacturing as well as construction, having grown at about both at well over 8.5% actually. I'll